Hey guys, my name is Scott Phillips, and this is the recording of the crypto salary presentation that I did today live. Unfortunately, the quality on the recording was, the settings weren't set right and it was super low res, so I'm just redoing it. And here we go. Let me share my screen and we can do it. Okay. So you can earn a salary from crypto. You can make consistent profits when the market goes up and when the market goes down and when the market goes sideways. And you can do that with Crypto Perpetual Futures, which is a really fantastic and fascinating instrument. And we're going to do a really, really deep dive on it today. And so it's a 2-day seminar, and this is very different than what people usually do. So most people in marketing kind of show you like this much of it and then ask you to pay money. I'm not going to do that. I promise it's not going to be like that way. I know you all think that it's going to be that way, but it's not. I'm going to teach and I'm going to demonstrate live my whole trading system, not just parts of it. I'm going to give you the whole thing in a way that you can take that knowledge away and build a proper, real trading business from it. And I'm giving it all for free, and that's absolutely no bullshit. I'm going to teach the whole thing, absolutely nothing held back, exhaustive detail, and not just the bare minimum. I'm going to give you enough that you can trade this every bit as well as me without paying a cent, every tiny little part. And I'm going to give you the written rules. You can keep a copy of this video, the whole bit. And, you know, of course, I got something to sell at the end, but that something is time. And if you want my help at the end of it to work with me and us do it together, and I can keep you on track and mentor you personally, I absolutely do that. I can turn you into me. I've done it before many times, but you don't need that. So I've done exactly what you're trying to do, and I can make certain that you hit your trading goals about 10 times faster than you could by yourself. I know, because I've been a trader for a long time, but honestly, you don't need to. If you've got a little bit of grit and you pay attention the next 2 days, you have everything you need. So this is a simplification and an evolution of the systems I've been building for 10 years, and our community's been trading for a long time. So some of you already know large parts of what I'm showing today. Tomorrow is all brand new. None of you know that. But what I'm showing today is different from what you know in that it's way simpler than any of my current systems. It takes just 10 minutes a day to trade. Actually, I'll do it tomorrow, and I reckon I'll get it under 6 instead of 4 hours with the current system. Gives away just 5% of profits to the brokers compared to 30% right now. And apples for apples, the edge is 338% stronger than it is in FX. It really is amazing system. It's straight gangster. You'll discover it all today. I'm very proud of it. It's one of the best systems I've ever built. And I'm delighted, really, really legitimately delighted to share it with you today. So it is my great pleasure. And I don't have students. I never refer to people as my students. I don't like that. It puts me up here and them down here. It's not like that. Any of you that know me know that I have community members that I'm honored to serve. And I'd just like to start with, may you realize what you are truly looking for. May you pursue it relentlessly despite all obstacles and find it. So please switch off your mobile phone, shut down the Facebook. I would go really, really fast. We have the big complaint from the live session was that I showed too much, went too fast, gave too much information, but fuck you. I'm just going to go fast. So that's the way I roll. So what you're going to learn today is how to make a salary from crypto in just an hour a day. You don't have to suffer through the downtimes. You don't have to wait months or years for your coin to moon. You don't have to watch every single coin in your portfolio bleed the death of 1,000 cuts when the market pulls back. You do not have to wait for alt season. You get what you deserve like clockwork every damn day. Conventional wisdom that the big money from crypto is from holding a coin for a few years through the ups and downs. And then luckily one fine day, this thing moons and then you sell out right at the top. That's conventional wisdom on the way to do it. I've done that. Feels awesome. It's great. Love it. It's actually true, but it's very, very high skill and emotionally very, very difficult. And there's a whole lot of factors outside your control. You can't control when the sun comes out. You know, the market does what the market does, right? Like you are not in control of that process. So conventional wisdom is that you can't earn a consistent day-to-day, week-to-week income from crypto, that you can get rich off crypto, but you can't quit your job and do this full time. And that you have to endure these like 1-year bull market, 4-year bear market cycles that we've had and hope for the best. I'm going to show you how to earn an incredibly stable income from crypto without any of those usual drawbacks, without any of the usual drawbacks of day trading even. So you're not sitting in front of the screen all day, you place your orders and you fuck off. You're not spending 10 years becoming some sort of a savant at reading charts and predicting market direction. None of that. There's no technical analysis, no chart reading, and there's zero subjective and confusing decisions. The rules are black and white. And what that means is that when you take a trade, 100% chance I'm taking the same trade. There is no like, oh, but I liked this one and he liked that one. Like, that's all shit, you know? And another big advantage is you're not holding overnight, so you're not subject to crashes. So you wake up in the morning and you do your thing, and then at the end of the day, you clock off. So crypto investing can be hard. It's really, really profitable. I've made a lot of money out of it, but let's be a bit real for a moment. Like you've seen with the automated wealth creation engine system, it's pretty bumpy. Like, I've had multiple drawdowns, 70%. You will go 3-month periods without making any money at all. And at some point, you're probably going to become a bag holder. But I have a solution. And instead of taking long only trades, we're only betting that the market is going up with a horizon of like several months or years. You can take trades where the market goes up, or you can bet that the market will go down. And instead of a horizon of months or years, we're talking about a horizon of 8 to 24 hours. So what this means is that you can do it at any time of the day, a time of your choosing. It doesn't have to be the same time each day even. You take 2 trades every day. It takes you somewhere between 6 and 10 minutes to do. You place them and walk away, you live your life. I'll do it in front of you tomorrow, but it takes me about 6 minutes right now. And I've been practicing for, a month-ish. I'll get better. You'll get better too. Trades typically last for about half a day, but you won't even be around to watch. You set your trades, you walk away, you come back the next day to check if they work. I don't have live prices on my phone. I don't have any chart or any data access on my phone, no broker apps on my phone, nothing. You're just out doing your thing. So we're going to do it together tomorrow live, but you make money when the market goes up, when the market goes down, and most importantly, because it happens most of the time, when the market is going sideways. So here is an example trade I actually took last week. So this was my long, those of you who know my FX system are going to find this really, really familiar. This was my long entry. This was my stop loss. The amount that I risked was between here and here. And the amount that I gained when I hit my profit target here was twice what I risked. So essentially, you strip all the crap out of it. I'm betting $1 and making $2 if I win. So think of it like gambling, but not as the casino customer, as the casino owner. So you pick an amount you want to risk on every trade. I've been doing $1,000 a trade, which I think is appropriate for an account size of about 20,000. And I have over $1 million in crypto, but I'm really, really conservative with intraday trading. So you check which way the futures perpetual funding rate is telling you the market should move. And don't worry, we're going to do a very deep dive on this. And it tilts the odds in your favor. And you only take trades in the direction of the edge. And there's this massive problem in crypto trading. Which coin do you trade? Do I like this coin or that coin? Do I like Luna or Sol or AVAX or whatever? This solves that problem. Which trade do you take? You take the trade with the strongest edge. Mathematics, not opinions. This is a very battle-tested system. This is not some kind of hypothetical back test that I ran up from data mining. This is a better, simplified, more robust version of the system I've personally traded for years and years and years, which we've traded hundreds of people now to expert level with a real-world track record now of 2,200 auditable and verifiable trades. I'll give you every one of them. You can just randomly pick on trades, check, look up on charts and see if they're real or not. Absolutely 100% legit system. And there's a large community of people earning their living from the FX version of this right now. And these are the FX results. If there's one thing that stands out, it's that you notice what's different between this and crypto. Like, there's none of this like, wow, oh, we're fucked. Oh, maybe it's going to be okay. Oh, we're fucked. Oh, there's none of this moon. It's just a steady clocking kind of thing. And these are from 2019 October to the present. We did a 2,500 trade back test before we started, and we're up to 2,200 real world trades. The biggest peak to valley drawdown actually happened here. It's difficult to see because of the scale, and it was 11.5% peak to valley. No, it was 11% peak to valley. Yeah, about that. So anyway, so For all this time, it's just been steady and smooth. It doesn't try and win every time. The win rate in FX has only been 53%. What makes it work is that our average winner is 1.3 times the average loser. A system quality number, which those of you who know trading know this is a measure of your system quality. A system quality number of 2 is tradable, 2.5 is excellent. This is like unheard of, basically. It's got an expectancy of 0.21 per trade, which is about normal for a professional level system. And our system today works much, much better than that, by the way. So you will not believe how much better this works than anything else. And despite being simpler and easier by far than the FX system, takes less time to trade, makes far more money while working equally well in bull, bear, and sideways markets. One thing I want to point out about this is that this is before the coronavirus. This was during the coronavirus. This was during the coronavirus panic, and this was during the post-coronavirus rally. So we've got very, very strong evidence that it works in normal markets, works in crazy crashing March 2020 markets, and it works in the markets we've had since then. And you know, the last couple of weeks, the equity markets have been down, and look, still fucking working, right? This thing is a system for all seasons. Now, how do we do that? One of the most powerful edges in finance is what's called positive carry. You can see this bloke liked it so much, he named his boat after it. Nice boat. We're going to get into it in detail, but we use this powerful edge to trade in the same way and the same direction as literally trillions and trillions of dollars of institutional money. So the whole basis of what we're doing is we're taking our FX system and we're trading it in the direction of positive carry, because institutional traders nearly always want to trade with positive carry. That's all we're doing. You know, if you know my FX systems, you can stop now and it's the end of the game. By combining the carry trade with our already powerful price action system, the edge is so strong that we can remove many rules from the system. We can make it more robust and more reliable. And this is a $3 trillion market right now. Like, it's insanely big. And what I discovered, which is my innovation, is that the positive carry edge works far better in crypto than in FX and stocks. And if you think about it, in FX, the carry rate is sent by central banks once every few months. What I mean by that is if you buy AUD JPY on an FX broker, you get the difference between the interest rate in Australia and the interest rate in Japan. Usually that's 1 or 2%, sometimes a little more, sometimes a little less. That is enough to move currencies, trillions and trillions of dollars in value, because there's leverage in FX, right? So if you're earning 1% on your money and you've got 30 to 1 leverage, you just earn 30% at no risk. Like, well, if there is risk, but not that type of risk. So with futures, the carry is expressed as what's called contango. The reverse is called backwardization. We're going to get into it, but it's the difference between the futures price and the spot price, which is largely a function of storage and insurance costs and expected changes in production. And what I mean by that is right now, if you want to buy wheat in the futures market for delivery next year, the prices are really high because people think that there might be because of the war in Ukraine, there might be a shortage of wheat by next year. So with crypto, the carry fluctuates a lot, like really a lot, even intraday. And why? Because there's no central bank and they're not meeting once every few months. It's like going up and down all the time. And it's very, very exploitable. So this is a 1 hour chart from like mid-January to now. And you can see that when this, it's not every time, but when this funding rate gets too positive, the market starts going down. And when the funding rate gets too negative, it starts going back up again. And, you know, we have it went up too much here and we get a little mini crash. It went up to here and it actually crashed today after it was up too high. That's how it works. So what you're going to discover today is that by only taking trades with positive carry, we take out the vast majority of losing trades. So these are the results of the first 3 months of the year in Bitcoin USD Perp, which is the Bitcoin Perpetual Futures. And these are slightly better than other altcoins, but not so much that it's like out of bounds. It's just Bitcoin is a better market probably. So our negative carry, well, let's do positive carry trades. So out of 100% of trades, we have 50% winners and and 23% break even. So we have 73% either won or you got your money back. Only 27% were losers. And we have an expectancy of 0.71 per trade. And what that means is if you bet $1,000 per trade, you get back on average, after all the losers, you get back $710. Now, only 44% of all the trades were positive carry, 56% of them were negative carry. So the win rate dropped from 50% down to 30%. That's actually wrong. This should be 16% break even and 53% losing trades. So our expectancy drops from $710 a trade to just $30 a trade. That's not even going to cover your brokerage cost. So out of 56% of the trades did absolutely nothing for our P&L. And our current Euro US dollar rules are fantastic, steady performer. Break-even rate 53% between win and break-even, and we have an expectancy per trade of 0.21, which is $210 on average for every $1,000 bet. On our new simplified rules, our win break-even rate goes up to 73%. Now expectancy per trade is 0.71. And apples for apples, real world, it's 338% better than before. 338% better. Can you see why I'm excited? The win rate going up while the size of the winners goes up means we're improving 338% in performance while making it robust. So it's a fundamental principle of system design that the more rules you put in, the more fragile it is, the more likely it is to fuck itself. Anytime you can take rules out and make it simpler, not only does the mistake rate go down because the system is easier to trade, but it becomes more robust because there's less chance of luck and randomness coming into it. So it's a very, very good thing to make your system simpler and simpler and simpler all the time. The truth is that our current FX system is really very difficult to trade. You know, I built it for myself. It's high skill indeed. And I never marketed it to a mass audience because it's only really suitable for nerds like me who really want to be pro traders and people want to sit in front of the screen all day, which I used to want to do. I used to love doing that, like all day, every day, 12 hours a day. But this new system is the first day trading system I've ever seen that's simple and easy enough that a newbie could do it. And so how confident am I in these results? To be honest, I suspect this was probably really a pretty good couple of months for the system. But to make sure that I'm not fooling myself, I've tested it with 9 other altcoins, and the results are unequivocal. And every single coin, we have that same massive differential between with positive carry makes a lot of money and without positive carry just doesn't, either loses money or does nothing. And the difference is enormous. Like, I'm very, very confident that this edge is real. And even better, you won't be sitting in front of your computer for 3 to 6 hours a day. You'll be done with your working day in a few minutes, under 10. Hopefully I'll demonstrate it tomorrow and I won't mess it up. And you'll be free to fill your day with the dream lifestyle you desire. And one last thing, I've been able to reduce the impact of commission, spreads, and fees from 30 to 30, well, it's 28 to 35% of total profits, depending on the market in FX and futures, which is really, really hateful. You can get it down to about 19% with traditional futures, but it's still hateful. It's still a hateful amount of your money to give away to the brokers. We've got it down to under 5% of total profits, and you're going to be really impressed at how we do that. This removes one of the really big sticking points with the old system, that you really needed a deep discount broker to make it work. You couldn't make it work with dodgy spread bets or binary crap or whatever the shitty off-brand brokers that people use are. And as you will no doubt be as amazed as I was to discover, I'll show you how to earn over, sometimes well over 100% per annum on your trading capital while you trade. And that's without staking or farming or any of that dodgy nonsense, which I don't even understand. So we're going to trade to live. We're not going to live to trade. And some of you might have had bad experiences day trading before, right? Like, have you noticed there's a lot of noise and not a lot of signal when you get right down to the small time frame charts? And what I mean by that is, if you're looking at a 5-minute chart thinking that you can predict the next week based on what you're seeing on the 5-minute chart, the 5-minute chart or the 15-minute chart or even the 1-hour chart has a huge amount of randomness in it. Even the daily chart has some randomness in it, but not nearly as much as that. Like, you've got a lot of noise and very, very weak signal. So I built a system with that in mind. So there is no thinking at all required here. Like, low IQ people are perfectly welcome. Smart people I like to think I'm pretty smart, but what I need to do to trade the system well is switch my brain off. I need to leave my brain at the door, just follow the rules. It's 100% mechanical rule system. And why is that significant? Well, it means if you follow the rules, you're going to get exactly the same result as me. Like, not this much difference between us. Like, you're going to take the same trade I will, with the same stop loss and the same entry at the same time with the same target. You make the same money. So it's not this situation where, oh, well, I only made $5,000 this month and Scott made 50 grand because he's much better than me. Like, there is none of that. That's terrible. And so a lot of what's taught as trading education is like this. You have to be this like Picasso painter level of mastery skill. And this is not that at all. This is the opposite of that. This is house painting rather than fine art. And you can be better than me at this. And anyone who's on this, there'll be 100 people on the call today who know people who are better than me at trading my own system. So you don't need any technical analysis or chart reading skills. There are no subjective decisions about chart patterns, no trend lines, no head and shoulders, no forecasts, no picking coins, no narratives, no fundamentals, no personalities, no Elon Musk, no Quan Do, no, none of that bullshit. No guessing overall market direction. Are we in a bull market or are we going to go drop down to 20K? No, I like this coin or I hate this setup. So all the stuff that's really, really hard is gone. And it's perfectly possible for a beginner to be just as good as me. With, I'd say, 1 to 2 months of practice, I'd say a month you're going to be good. 2 months of practice, you should be as good as me. And all my community here, they know it's true. There's between 5 and 10 guys who are my level, and some of them are clearly better than me. Like, if you've ever been on Sherry's FX trading calls, it's just so obvious he's better at it than I am. Like, it is really possible to be great at this without inventing it. So I don't know about you, but I found a lot of ways to fuck myself over with trading accounts. And the only way I've ever found to unfuck myself is to have a set of trading rules and stick to them. And we call that a system. And there's many different versions of trading systems, but they really fall into 2 types. So we've got discretionary systems, which are like vague guidelines. And if you see this thing, you should be buying pullbacks in uptrends, or you should be buying breakouts in a bull market. So for example, that's probably 80% of what I do in the crypto accelerator is buy breakouts in bull markets. Perfectly valid trading, works really good, but it's very, very high skill, extraordinarily high skill. Even for me, it's hard to stay consistent. I have to be on top of my game all the time, and every day is a challenge. This is not like that. Mechanical systems, you just say, I'm not going to bend the rules at all, and I'm a monkey executing the system. And unsurprisingly, a lot of people hate this idea. And what you hate, if I'm talking about you should trade a mechanical system, you go, oh, no way, I want to pick the charts myself. I'm a fundamental guy, I'm a this guy, I'm a chart. Oh, those people, what you're really feeling is you're rebelling against the idea of having no control, no input, of just being a cog in the machine. Those people tend to need mechanical systems more than anyone. And as a general rule, like as a general proposition, my advice to everyone is that beginner traders, here's beginner, here's mastery. The closer you are to beginner, the more mechanical you should be making your trading. The more expert you are, like I could probably improve my trading with a little bit of discretion, adding a little bit of discretion in with the mechanical. And these things exist on a spectrum. This particular system is right here, all the way on the left-hand side of black and white. You could program this, totally algorithmic. Yeah, this is the perfect complement for a crypto portfolio, or if you're a long-term hodler. So it's emotionally easier to stay the course if you're already stacking cash while the market is going down or while the market's going sideways. It doesn't hurt so much if you're like, oh yeah, sure, my portfolio went down, but you know, I made 20 grand this month day trading, so it's okay, you know. And I'm not going to name drop him because that's kind of a douche thing to do, but most of the guys on the call today know a very famous trader. He runs one of the most famous hedge funds in the world. He paid 10K to learn this privately from me. Never told me who he was until about 4 months in, and he trades it at $3,000 per trade. I'm not going to name drop him, but he's like, you know, the top guy at Sequoia Capital, which is Peter Thiel, the Facebook founder's hedge fund, Clarion Capital Management, big time hedge fund. president, PayPal Asset Management, vice president, PayPal, vice president, Bank of America. Just a great dude. He liked it. So why I designed this system is I'd been a professional trader for 10 years and my systems were legitimately good and I was legitimately good. And in 2015, I had this 9-month drawdown, which just hurt my feelings. And I was trading well. And it was like a Fredo broke my heart moment. Like I just got to the level where it was like, okay, I'm on the verge of like, I can start to think about financial freedom and like, it was like multiple millions and I was just right there and it was just within my grasp and I had my biggest single day drawdown on Brexit Day and I lost money for 9 months after that. It was just hurtful. And I nearly gave up. I nearly gave up trading and went and did something else and close to defeat, I rose to my feet. And the goal of this system is really true freedom. And, you know, I remember at this time I was paying for my wedding and I was bleeding out and bills were coming in and my tax bill came in and you know, I wondered what the hell I was doing with this trading thing. Like I felt like I couldn't stop. I was getting up at 4:40 in the morning every day to start trading and it was supposed to give me freedom and I was just really, really trapped. And a shameful secret, like a terrible secret, which I need to get out, is that I only started my email list, which became my website, which became the real business it is today, because this was a backup plan. I doubted my ability to earn a consistent living from the markets, which is really pathetic because I've always hated these trading educator types. I fucking hate them. They're all scams. They're all guys who never did and can't do and blew up and they suck almost universally. And I was on the verge of becoming one of those people that I hate, which is shameful. And this system turned all that around. And so for the first time, I had a system where the skills could pay the bills, where the system earned the money, not me. And so this is what it's looked like in the long term. So these are our individual trading days. So I mean, profitable 70.6% of trading days. And of course, we have good days and bad days. But one of the things I want you to notice is, first of all, this is a 5% day and this is a 5% loss. We have quite a few 5% days. We have no 5% losses. We definitely, just at a glance, you can see that there's more winning days than losing days. And look at how big the average losing day is. And then look at how big the average winning day is. So this is exactly what you want to see. You want to see when we make money, we make more money than we lose when we lose money. And we want to make money most of the time. And it's just beautiful. It's beautiful and it's worked for years and it's shown, and it's worked through some of the most stressful market dislocations in the last 100 years. Which makes me think it's probably going to keep working. So this was the first system I designed just for safe and consistent income. And it's not trying to make the maximum amount of money, it's just trying to make a salary. I wanted a system that didn't rely on having amazing skill and complete concentration. I wanted simple and clear rules with no wiggle room, no discretion. I didn't want to make money if I was trading well and then give it all back when I was trading like a noodlehead. And really, after 10 years of ups and downs and thrills and spills, boring old man life. That sounds good to me. And so how I adapted it for crypto is kind of important. So there's this thing called the futures funding rate, which we're going to get right into. It's a balancing mechanism where if you want to go long and everyone else wants to go long, you have to pay the shorts an interest rate to go long. If everyone wants to go short, you have to pay the long on the other side of your trade an interest rate if you want to go short. So what this does is it tilts the roulette wheel in one direction. And substantially in that direction, since you get paid extra to take the trade. And these interest rates on Bitcoin, for example, right now it's 12% annualized. It was up as high as 60% at the market top. Altcoins are much higher. The highest carry interest altcoin, which we actually took a trade in yesterday, was 106% per annum. And if you can earn 106% per annum, and it goes up as high as 300% or so, market booms, people are going to buy that coin just because they're earning that interest rate. Like that's a lot of interest to it. That's a very, very attractive rate, especially in a low interest rate world. And so many traders are going to be in the trade simply to earn the carry, not because they believe the market's going up or down. And this becomes, to an extent, a self-fulfilling prophecy, but it turbocharges the edge on our already powerful price action system. That's how it works. So let's look at the perpetual funding rate together. So you can get this for free from many sources. So I'm going to coinglass.com/funding rate, and my broker is FTX, and I'm sorting. So these are the bearish edges in order: Uniswap, RON, Ampleforth, and these are the bullish edges in order when I sort Glimmer, Bow, Lux, Kasos, and Dent are the bullish edges. And so we don't have to have, another way you could get it is to go to ftx.com/funding, and you can see them all listed here, and you can just click on download CSV, and it's going to download the CSV. Pretty simple. So the elevator pitch version of the system is that we're taking a simplified, easy to trade version of our battle tested FX system, and we're taking only the trades where we get paid a high interest rate to take them, and that's over 100% per annum. This improves the edge by about 300%. So how does it work? It's a mechanical set of rules on 15-minute charts. Takes a few trades a day. Sometimes it takes more than 2, but we'll explain that tomorrow. For an average of a few hours each. It's actually a bit more than a few hours. It's 8 hours-ish. I haven't worked out exactly, but it's about 8 to 12 hours. You don't hold for more than 1 day, and you never try and catch a big move. You're never trying to swing for a big swing. You're for every dollar you risk, you're trying to make back 2. That's not our game. You don't screen watch. You place your trades and walk away. You don't even have live prices on your phone. You go long and short equally, and even in a bull market, you have to be willing to go short. The market's going up like a freight train. You've got to be willing to go short. So I've taught thousands of people to actually beat the markets with my trading systems. I've seen many succeed. I've seen even more fail. And there's one sure recipe for success. So the people who did all these things ended up being successful. And if you do all these things, you are trading at a professional level. And if you do these things, it's not like in 20 years, I'll be a pro level trader. You're going to be a pro very, very quickly. So to succeed, I want you to understand the system and not just learn the system rules. Like, you're going to understand why the thing works. You got to test it properly, and don't just trust me. I'm just a fat guy on the internet, guys. Like, you just can't trust anything you hear about trading education. Take the time to test if I'm lying or not. You've got to keep proper records. This is the #1 predictor of if someone's a good trader. If you meet someone who tells you they're a good trader, say, can I see your trade spreadsheets or trade logs? If they give you a bunch of broker statements or they oh, that's private, I can't tell that, they're just full of shit. They're not a trader. You should stay focused on mistake rate and not profit. You should surround yourself with other traders who are better than you. And any trading community where you feel like you know more than the other people is inherently toxic. I have to make very, very concerted efforts to constantly upgrade the level of traders I'm surrounding myself in, so that my peers right now, I feel, are so better than me that it's embarrassing that I'm that bad. And this is the way that you constantly level up. This is the trick to leveling up, is consistently putting yourself in communities where you feel like everyone's better than you, and you've just got to, like, wow, I've really got to step up here. So what is our edge? So let's understand a little bit about how markets move. And Professor Emeritus of Maths at MIT was Benoit Mandelbrot, the fractal guy. He did the largest study of market moves ever. Weirdly, cotton is the longest traded futures market. It's been traded since the slave trading days, under a cotton tree down south, under not a cotton tree, cotton's not a tree, under some sort of tree down in the south. And what he found from a statistical analysis of the markets is that the markets spend 87% of the time going sideways, and they make 90% of the price moves in 13% of the time. And, this is Shiba. You can see everyone wants to trade this or this, but really most of what you get is this. And everyone who trades will know that this is the truth, that most of the time markets are fucking you around, and very, very rarely they become very easy and predictable. So we have big bull markets in Bitcoin, but we also have very long bear markets and sideways periods. 361 days here, 260 days here, 633 days. I was trading in these times. These were hateful days, really hateful days. So we need a solution. And, look at the last year. It's gone up a bit since I made this chart, but really we're right back where we started after a full year ago. Really. gone nothing in a year. And tell the truth, who considered giving up last year? Like, I'm sure some of you consider, oh man, maybe this is a terrible mistake. I know people are terrified that we're going to drop below here and start a bear market. And the solution is that we need a way of earning money in crypto that works in bull markets, bear markets, and sideways markets. So worst comes to worst, we enter a bear market and you're still earning money. So the combination of this with the automated wealth creation engine, it's incredibly powerful. And that's what you're going to discover today. And so let's get started. So you can use any charting package or website, but my preferred one is tradingview.com. The free one is perfectly adequate for our needs. Let me show you how to set up charts just quickly. Okay, so this little button here is indicators. We're going to put a Bollinger Band. So you click on this. It's going to add that. We're going to go to settings and we're going to take basis off, and I'm going to take the background on. I'm going to make sure the inputs are 20 period and 2 standard deviation. That's what we've got here. Also, we're going to put this thing by clicking on the indicators again and type in moving average exponential. I've already done it, so I won't do it again. And this is an 8 period exponential moving average. Now, there's one other thing that you don't need, but it's really handy to have, is see these little H's and S's everywhere? They're a custom indicator that you can have for free. If you go to the search in TradingView and type capital HG for Holy Grail, you'll see a bunch of, we used to call this system the Holy Grail when we first started trading. There's a bunch of indicators that other people have traded, and the H and SS scan, which stands for hammer and shooting star scan, which I'm going to explain today. That makes it easy so you don't have to actually, so you get reminded. Anyway, so that's how you set up the charts. Now, we want 3 charts. What we want is a 15-minute chart here, 30-minute chart here, or a 60-minute chart here. Now, you don't have to have them all 3 on the one thing. You could open up 3 browser tabs and just have 1 tab. And how you set that up is you click up here and you can either have 1, or you can have 3, or you can have however you like it. I like it like this. You can have it however you like. Doesn't matter. Okay, moving on. Okay, so a Bollinger Band isn't magic. What it is a measure of when price extends 2 standard deviations from the mean. So if you look at a bell curve, between 2 standard deviations should be 87% of the price action if the price was normal Gaussian distributed, which it's not quite, but it's close enough approximation for us. So in the real world, those 2 Bollinger Bands hold about 82% of the price action. So they're not magic. It's just a nice place to bet that price will change. Bet that price will change direction. So if we're looking at 15-minute charts, which we are, lower time frame charts have a lot more noise and a lot less signal. And what I mean by that is that one big person buying a big amount of Bitcoin or buying $1 million of whatever actually moves the chart by themselves. Whereas on a daily chart, that's not really the case. So we have a lot of just randomness in these charts. Therefore, attempting to time longer moves is more difficult. And something can look perfectly and then just change its mind. And so the smart play for traders who are planning on holding for months or years is to hold for the big move, to be there right at the end on that fantastic day. But the smart play for traders planning on being out in 8 to 12 hours is just to play reversion to the mean. So something gets too expensive, sell it. Something gets too cheap, buy it. And just yanking and banking between those. It's a much smarter play for intraday traders. And how do we know this? Because the vast majority of intraday algos run by the investment banks are trading mean reversion and stat arb and things like that. And hardly any of them do trend. Trend following unequivocally works better the longer that you do it. So I realize this goes against what many technical analysis types think, like a chart's a chart, it doesn't make any difference if it's a 5-minute or a daily or a monthly. And they're wrong. Like, you can just be wrong about that. And if you think that, you need to wash your brain out with soap, because you're wrong. The data does not lie. And there's still a problem with trading mean reversion that has to be overcome to be profitable. And So you imagine if you're trying to sell, short it up here. Oh, if you're trying to short it up here and buy it up here, we get every now and again, we get one of these big trend days. Imagine you're going long here, you get fucked. You're going long again here, you lose again. You go long again here, you lose again. 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 Long again here, you lose. Long again, long, lose, lose, lose. Oh, this is getting tiring. Losing all fucking day. All you do is lose. So mean reversion works really great until you get one of these days. And the effect is twofold. Not only are you losing like 80% of the time in one of these days, because there's no way to go long against a trend like this and win, right? Like it's just impossible. No, the best guy in the world can't do it. Not only is that happening, but look how many trades you're taking. You're taking trade. It's just very, very, very hard. Yeah, it's very hard. So we need a solution to this. And so the solution to that problem, it's a family of price action setups known as retests, also known as major trend reversals, 2B setups. The head and shoulders is kind of a version of retests, but not really. So I didn't invent these, and these are known by a whole lot of different names, and almost every serious trader uses one version of them. My version, I believe, is superior because there's no subjective rules. There's no like looking at the chart going, I think this is going to happen because that. The rules are very black and white, and it makes it far easier. So let me explain by looking at the period up to the 08 GFC. So here you can see this is the whole bull market from 2003 to 2008. We zigzag up. And the reason markets zigzag up is because when they go up too fast, people want to take profits, drives the market down. It becomes cheap. People, bargain hunters step in, drive it up. People take profits, drive it down. So we have this stair-stepping pattern of higher highs. Every high is higher than the high before, and higher lows. So a bull market is defined as a series of higher highs and higher lows. Every low is higher. So at this point right here, you can put yourself in the mind of someone right here. The bulls are expecting another leg up. They've been conditioned to buy every dip. Every time they bought the dip, it's made money. They're going to buy this fucking dip. Expecting a dip. Where is the point where the bulls have to admit they're wrong? It's right here. It's like, oh shit, it's supposed to be up here now, and instead it's down here. Oh shit. So this is that point right here. Now, at that point, you can't be a bull and still think that you're right. You're actually wrong. And at that point, we stop making higher highs and higher lows and start making lower highs and lower lows. And this is the GFC. This is how the GFC played out. This is the definition of a bear market. And this works in a micro fractal time frame. We're going to have a pattern that captures this behavior. So it's very important that you don't just think, oh, these are the rules and blah, blah, blah. It's not just something I data mine. These are capturing a very specific set of black and white rule of market behavior. It's not random. It's not data mined. We're exploiting a DNA level cognitive bias. And it's been around since we sat around campfires on the African savannah, because we have to overweight recent evidence. If you hear the rustling, if you're sitting around a campfire, you hear rustling in the bushes, you can't keep going on with whatever you're thinking about. You have to stop, because that might be a lion about to eat you. This edge is not going away. It's present at 90% of all major market tops across all markets, and it's a handy thing to know. So let's learn the setup right now. So it's called the RTV setup, which is a stupid name. I'm too old to change. Every time I try and name it to something else, I just accidentally start calling it RTV again, so we're stuck with it. We have three elements, and they're mechanical. First, we need a touch of the Bollinger Band. Second of all, we need one or more higher closes without breaking the low of this Bollinger Band. Third, we need one or more lower closes without breaking the low of the Bollinger Band touch bar. So Bollinger Band low, one or more higher closes. It's worth noting that higher close can happen in the same bar. Didn't hear, but it can. Then we need a lower close. The setup is complete at this point, and we place an order to go long at this green line with a stop right below here. That order may not be filled. If it's not filled, we replace it at the high of the next bar and the next bar and the next bar until it is filled. So you can see here, we get a better entry. We were planning on going long here. We get a better entry. And it's not just that we get a better entry. We don't want to be randomly thinking that the market is going up until it starts doing what we think it's going to do. If I think the market's going up, it's much safer to wait until the market actually starts going up before I get long. Now, if you look around back at this, if I waited until I saw the market actually going up before I got long, I would have saved myself this losing trade, this losing trade, this losing trade, this losing trade, this losing. This is all it does is stop us saving. It stops us from taking silly, unnecessarily losing trades. So when it's safe to go counter trend is when we stop making lower highs and lower lows. And at this point here, and for a sell, when is it safe to go short? It's not safe to go short here. 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 It's only safe to go short here. And so this setup is a mechanical rule that captures that behavior. Let's do it one more time. It's in reverse for a short too. They're exactly the same. Touch the lower Bollinger, element 1. Higher close, element 2. Lower close without breaking this bar low. Element 3, the setup is complete. We place an order to go long here. If it's filled, great. We're long, stop loss here. Target is twice the distance between here and here. We'll cover that soon. If it's not filled, we replace the order until we get filled. I'm not going to go through a heap of examples. I'll in the YouTube video, I'll place the download links for the rules, and you can go through those examples yourself. There's a big PDF that, and don't worry about getting the exact rules yet. You'll have them printed out. It's in the comments. Just there's a Google Drive there with everything. And there's another mean reversion set up, the RTC. Rather than reteach it, because it's much simpler than the other one, it's better if I explain what it's for. It's the same thing. It's the exact same thing, but sometimes something is a retest, but it's just not caught by the rules. It's like a catch-all to catch comparatively rare situations where we really do have a retest. It just doesn't quite fit the rules. It's the rules are a Bollinger touch and then a hammer candle within 5 bars for a buy, or a Bollinger touch, then a shooting star candle within 5 bars for a sell. Very, very simple. The download link and a bunch of examples are in the comments to this video. So now I've shown you the price action setups, and most of you already know these because I talk about them all the time. Let's talk about multiple time frame confirmation and confirming evidence. So we all know that the strongest trends are present on multiple time frames, and that this is a very well understood and very well validated edge. You all know that if you've got a bull trend on a daily chart, a weekly chart, and a monthly chart, it's like on like Donkey Kong. So let me demonstrate the first type of confirming evidence, the Bollinger touch. So consider the 15-minute chart here. We have the 30-minute chart and the 60-minute chart. This is a Bollinger touch on the 15-minute chart. Oh, what's the 4th of April? Let me go back to the 4th of April. The 3rd of April, sorry, my bad. There we go. No. Here we go. So you can see the cursor on all 3 points. This is a reversal on the 15-minute chart. Also an extreme subject to be reversal on the 30-minute chart, and an extreme on the 60-minute chart. So obviously an extreme is more extreme if it's also a 2 standard deviation move on the 30 and the 60-minute chart. That is our first type of confirming evidence. That works for both long and short. So if we go back to this one here, you can see we have a lower Bollinger touch. We have a hammer candle completes the retest concept setup. We go long here. Do we have confirming evidence? We have a lower Bollinger touch on the 30, and we have a lower Bollinger touch on the 60. So we have confirming evidence. So you can see the market runs away with that. Here we have touch of the upper Bollinger. We have one or more lower closes. We have two lower closes. Then we have a higher close. We go short here. Here we have touch of the lower Bollinger on the 15, on the 30, and on the 60. See? We have one or more higher closes. We have one or more lower closes. We go long on a break of this red line here. And I don't think this one worked. No, this one did not work. Here, we have another trade. We have a touch of the upper Bollinger. We also have a touch of the Bollinger on the 30-minute and also on the 60-minute. We have a lower close in the same bar. We have a higher close. We go short on the break of this bar. Stop losses here. You can see the trade works. Make sense to everyone? Okay, good. So if we only search for mean reversion setups on multiple timeframes, there's still a problem. If we get a very, very strong market trend, we're going to get hosed. So there's a very elegant solution, which I want to show you now. So if we think about the two strongest edges in price action, first of all, we have mean reversion off an extreme, like things go super extreme, and they're going to pull back. Things go super extreme, and they're going to pull back. Things go super extreme, and they're going to pull back. The second edges is that once you're in an uptrend and you get a pullback, the thing that was looking really, really good all of a sudden becomes on sale. People like things on sale in the same way that you like a pair of Nikes when they're on sale for 30% off in the sales. So an uptrend, then a pullback is a good place to buy. An uptrend, then a pullback is a good place to buy. An uptrend, then a pullback is a good place to buy. Now, these two edges, if you only knew these two things in trading, that would be enough. This is the bread and butter. And so you can see this on literally any chart. So we've got an uptrend. This is Bitcoin last year, sorry. Uptrend, pullback, easy money. 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 Very reliable. And it works for a fundamentally sound reason. I wanted to buy Bitcoin here, but I didn't have the balls. I had FOMO, but I didn't have the balls. But I'll buy it on a dip. Buying it on a dip feels safer until that dip becomes a crash, then it feels scary. So remember when I designed this system, I designed it to work in both bull and bear and sideways markets. So in sideways markets, mean reversion works amazingly well, like 65 to 75% win rates. And in trending markets, trend pullbacks are highly reliable. So when we combine these two together, we have something that really works in all market conditions. And that's why the performance has been so consistent through all these market regimes. So this isn't just my opinion. This is the real world results. Since over 2,200 trades, you can see that combining mean reversion and trend pullbacks, this is what I got. And this is how you do it, guys. Like if you want consistent performance, combine mean reversion and trend pullbacks. So let's discover a mechanical rule set. Let me show you this. This is cool. This is really cool, actually. Okay. Trending is a two-stage process for us. Step one, touching the upper Bollinger. So trending up. Step two is we get a single candle. Doesn't have to be the next candle. It can be further along. That makes a higher high and a higher close. We start trending at the close of this bar and we're trending up. Now, works. Let's look at it again. We touch the upper Bollinger here. We have a single candle, which makes a higher high and a higher close. We start trending up here. That one didn't work, by the way, because not everything works all the time. Here we have touch of the upper Bollinger. We have a single candle, which makes a higher high and a higher close. We start trending at the close here and we keep trending and trending and trending. We touch the upper Bollinger. We have a single candle that makes a higher high and a higher close. We start trending up here. going sideways. Here we touch the upper Bollinger. We have a single candle that makes a higher high and a higher close, and we're trending up. Now, this also works in reverse. We touch the lower Bollinger with a single candle that makes a lower close and a lower low. We start trending down. We stop trending when we touch the upper Bollinger. We'll cover that in a minute. We touch the lower Bollinger, and we have a single candle that makes a lower close, but not a lower low. So we're not trending. We're not trending. We don't have a lower close. Where do we start trending? This bar, we start trending. And you can see that you can't be sure that the market isn't going to reverse till about here. Now it's off and running. So that is how trends start. How does trend stop? Because you start trending and then you're trending pretty good here, and then we've stopped. So two things will stop you trending. Thing one is touching the upper Bollinger. So we start trending here. We start trending here. Trending. When do we stop? We stop when we touch the opposite Bollinger. The second thing that can stop trending is 20 bars counted from the high, not including the high. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. At the close of this bar, we stop trending. So we stop trending a little bit earlier. And why that is because after 20 bars of going sideways, the influence of the previous trend is waning, and we're starting to look like buyers and sellers are evenly matched. So let's go over those again. We start trending. Two stages. Touch the upper Bollinger, single candle that makes a higher high and higher close. So we start trending up. We're still trending. Trending even though we're a pullback. We're trending. 20 bars later, or here, we stop. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 20. So we stop trending here. Okay, now our trending confirming evidence, this is an 8-period exponential moving average. We need a trend with a pullback. So we need the trend to be on and a pullback to at least reach the 8-period moving average. It can go much deeper. It can go all the way back here, but it has to at least reach that. Okay. So trend turning on is a two-step process. Step one, a touch of the Bollinger Band. Step two, a single candle making a higher high and a higher close. Reverse for shorts, obviously. The trend turns off in two ways. Way one is touching the opposite Bollinger Band. And way two is going 20 bars without making a new high in an uptrend or a new low in a downtrend. You get the written rules, by the way. So today we've talked about the RTV and the RTC mean reversion setups on the 15-minute chart. We've talked about the Bollinger touch and the trending confirming evidence on the 30-minute and the 60-minute chart. And let's put these together into an actual trade setup. And let me show you how to size the trade, set your targets, set your stop losses. Really, really close here, guys. And there's no one in the chat. So I know you thought that I wasn't going to give you the whole thing, but here's the whole enchilada. These are the rules, the complete rules of the system. We have a mean reversion set up on the 15-minute chart, either the RTV or the RTC. And we have confirming evidence, either trend with pullback or Bollinger touch on the 30-minute. And we have confirming evidence, either trend with pullback or Bollinger touch on the 60-minute. At that point, the setup is complete. So for a long, and this is opposite for short, we place an order to go long on a break of the bar high. And this is a stop order. You can use a stop limit order, which is my preference. We'll cover that. We place a stop loss one tick below the Bollinger touch bar low. And the target is 2 times the distance from your entry point to the stop loss. And we call that your risk. Professional traders call it an R. Therefore, for every $1 you risk if you lose, you get $2 back if you win. So the example will make it really clear. So this is an RTC setup with a hammer candle. A hammer candle is a candle with a lower wick equal to or greater than 2 times the real body. The real body can be black or white, and a close in the upper half of the range. Its opposite is a shooting star candle like this or like this. Shooting star candle is a candle where the upper wick, this part, is equal to or greater than 2 times the real body, which is the colored part, can be black or white, and a close in the lower half of the range. Okay, so we have an entry here. This is an Ethereum trade, by the way. is when we took at 3324.5. Our stop loss is 3267.90. Our target is twice this distance between here. So for every dollar we risk, we get $2 back, and here's our target. So obviously, in the real world, you're going to build a spreadsheet to spit you out the numbers so you don't have to think. But I told you there's going to be nothing held back here. I want to show you how to calculate position size from first principles. So a difference from the entry to the stop loss is 33.24.50 minus 32.69.90 is $56.60. So what that means is if we take this trade for 1 ETH, it's an ETH trade. For every 1 ETH we buy, we're risking $56. So if it loses, we're $56 down plus some brokerage and slippage. So let's say we want to risk $500. How many ETH do we buy? So we buy $500 divided by 56.60. So we buy 8.83 ETH. Those 8.83 ETH are going to cost you the entry price at this time. So it's 8.83 times 3324.50. So to risk $500, if we lose, we're going to buy $29,000 worth of ETH. And the formula is the number of coins equals the desired risk in dollars divided by the risk per coin. The risk per coin is the difference between your entry price and the stop loss. Let's go over that again. The risk is the difference between your entry and the stop loss. That's your risk per coin. You take the desired risk in dollars, if it's $1,000, $500, $200, whatever it is, $20, divide it by the risk per coin, and that's the number of coins that you need to buy. So we're risking 29,368 worth of ETH, and we're trying to make either $1,000 in profit or $500 in loss. We don't care. This is all just going to even out, and we're going to make money because it all evens out. So what size account do we need for that? So you can take that with an account as small as a few $1,000s. You can, but you shouldn't, because that's a dick move. It's way too aggressive. So what I suggest is an absolute minimum of $10,000 in account balance to risk this $500 trade. And that gives you a generous margin for error that if you get a few losing trades, you're not going to be freaking out. Like, you could do this with a $3,000 account balance, but it wouldn't be smart. Like, honestly, it wouldn't be smart. So we want to keep, this would give us an effective leverage ratio of 2.9x leverage. You can risk 100x leverage. You should never risk 100x leverage. Back in the real world, even 10x is really quite aggressive, in my opinion. I'm very conservative about this stuff. So sure, you can make more money with more leverage, but you can also lose more money. And whereas amateurs tend to try and make the most money, professionals try and avoid blowing up. So if you want to be a pro, just try and size your shit so that you're never going to be busted out of the game. So let me demonstrate a couple more times, actually. So touch of the upper Bollinger, lower close. Element 1, upper Bollinger. Element 2, lower close. Element 3, higher close. Do we have confirming evidence? We have a Bollinger touch on the 30. What date is this? This is 4th April. So you can see we have a Bollinger touch on the 60, Bollinger touch there, where how much are we risking? We're risking from the low here, which is $10.95 to the high, which is $11.11. So it's so we're risking 16 cents per rune. Let's say we want to risk $500. We're risking $500 divided by 0.16. So we need 3,000. We need to short 3,125 rune, and those rune are going to cost us $10.95. And so we're going to risk $34,000 worth of rune. to make $1,000 or lose 500 bucks. Now, I've suggested that we need about $10,000 in margin to do that. And our target is about 1, about 2, probably about there. So what's happened here? We've got $10,000 in our account. It's appropriate to risk about $500 a trade on that at a maximum. So we've shorted $34,000 worth of rune. If it goes up here, we're going to be out of the trade. It'll automatically kick us out. If it's the target, we're going to be out of the trade, and we've got a target. And that's what happened here. All right. Okay, I really, really hope you enjoyed today. I am just getting started. Tomorrow's, like, if you think this was advanced, it's not. Tomorrow's advanced. Tomorrow's mind-blowing stuff, and prepared to be blown away. And it would be my great pleasure to help you implement what we talked about today. So at the end of the thing, obviously, I'm going to be launching a coaching group where I personally take you from beginner to mastery, and I do it all like myself. I'll be teaching everything myself. And it's a 12-week sprint to mastery. And you don't need it. Like, if you want to put in the work and do it yourself, totally, you can do it. Totally do this without me. I give you all the written rules. They're all there. These recordings, everything you need, you're going to have, and you've already got. I'll tell you more tomorrow, but if anyone wants to work with me, it's good to have a mentor, honestly. Like, it's good to have a mentor, and it's good to have a coach. There are very few pro athletes who don't have coaches. You know, Tiger Woods has a golf coach. You know, like, I have all kinds of coaches. I have a CEO coach. I have a mindset coach. I have a meditation coach. I have a jiu-jitsu coach. I've got I spend all kinds of money on coaches. I'll tell you more tomorrow, but if anyone wants to jump the gun and get a call booked early, and because there's very limited spots, there's only so much of my time, only so many people I can teach personally. If you want to work with me, you can explore working together at cryptosalaryincubator.com/application. That's cryptosalaryincubator.com/application. And yeah, I'm kind of an asshole, but I'm a really good teacher, and I'm really good at my job. And I have a track record of turning people into traders as good as me or better. And I can do that for you too. So if you would like my help implementing this, that's cryptosalaryincubator.com/application. Guys, I'll see you tomorrow. I'm really excited.